The cryptocurrency market recently revealed a dramatic tug-of-war that's reshaping the industry's landscape in real time. While Ethereum is hitting new heights of activity and investor confidence, Bitcoin found itself rattled by a massive sell-off that sent shockwaves across its market. But here's where it gets controversial. Is this just a temporary shift? Or are we witnessing a fundamental change in how these two giants are positioning themselves amid evolving regulations and investor strategies? Let's break down what happened in August, a month that clearly painted two contrasting pictures in the crypto world. On one hand, Ethereum smashed its previous annual record by processing more than 1.8 million transactions in just one day, a milestone that signals both growing usage and enthusiasm for the Ethereum network. Meanwhile, Bitcoin faced a severe setback when this triggered a rapid market correction and wiped out around $500 million from leveraged positions within minutes. Here are the key facts you should know. Ethereum achieved an astonishing 1.8 million daily transactions in August, its highest count in the past year. Nearly 30% of the total Ether supply is currently locked up in staking, a trend that highlights strong investor trust in holding Ethereum long-term rather than engaging in quick trades. The U.S. Securities and Exchange Commission, SEC, has recently provided important clarifications on the legality of liquid staking, a development that could open new doors for crypto investment products. Bitcoin's market dominance, essentially its share of the total crypto market, fell from 60% down to 57%, creating valuable space for Ethereum to gain momentum. Focusing on Ethereum, these signals point toward a maturing ecosystem that is increasingly attracting institutional participants. The surge in both transaction activity and staking suggests that many investors are shifting from seeking short-term profits to embracing Ethereum as a stable, yield-generating asset. To put it simply, staking means locking away your Ether to support the network's operations and in return, earning rewards. Kind of like earning interest on a savings account, but with crypto. Additionally, the regulatory clarity emerging around liquid staking products adds legitimacy, potentially paving the way for liquid staking ETFs, exchange-traded funds, which could revolutionize institutional involvement and boost Ethereum's market standing even further. This is not just about numbers. It signals Ethereum's journey towards becoming a cornerstone for more structured, regulated financial products in the crypto space. If this momentum holds, Ethereum could become the go-to platform for investors seeking security, regulatory compliance, and steady returns, all crucial factors for crypto's next phase of growth. Meanwhile, Bitcoin's experience in August was a stark reminder of its vulnerability to large, isolated transactions. The single whale sell-off not only caused immediate price disruptions, but also highlighted Bitcoin's sensitivity to liquidity shocks. This incident spurred a decline in Bitcoin's dominance, a key metric that many analysts use to gauge its influence over the entire crypto market. What does this mean for Bitcoin's future? Some experts argue that Bitcoin's relative decline might encourage investors and institutions to diversify more into alternatives like Ethereum, especially if Ether-based financial products gain regulatory approval. This sets the stage for a more balanced crypto market where leadership is not guaranteed by name recognition or sheer ecosystem size, but by adaptability, yield potential, and regulatory cooperation. Could this be the dawn of a new era where Ethereum's smart contract capabilities and staking incentives catapult it to a position of dominance? Or will Bitcoin bounce back, reinforcing its status as digital gold amidst turbulence? And here's the part most people miss. This rebalancing isn't just about price or volume. It's about the underlying financial architecture of crypto evolving into something far more sophisticated. As the market watches these movements closely, one question remains open. Should investors reconsider traditional loyalties to Bitcoin? Or is this volatility simply a momentary hiccup in Bitcoin's long-term journey? What's your take? The rise of Ethereum signals a true shift in crypto's power dynamics. Or is Bitcoin still the indisputable king? Share your thoughts below and join the conversation. About the author, Luc José, a graduate of Sciences Po Toulouse with blockchain consulting certification from Alira, has been with CoinTribune since 2019. Passionate about blockchain's transformational potential, He is dedicated to educating the public on this rapidly evolving ecosystem by providing objective market analysis, tracking innovations, and exploring the economic and societal implications of blockchain technology. Disclaimer: the views expressed here are those of the author alone and should not be construed as financial advice. Always perform your own due diligence before making investment decisions.